Izumi, if you can hear me, what is the thinking
Yes, I
behind this growth in, great, but what's the thinking behind things getting much, much worse there where you are in Japan?
Well, I mean, I think to start with, we have to, confirm the fact that these GDP numbers cover the January-March quarter, right? So this is data up to March, which is a month and a half ago, which is eternity in these coronavirus times. So unfortunately, since after March, the government of Japan issued a state of emergency that led to further shop closures, more people staying at home. So I do think the worst in the nadir of activity is actually going to be April. But the good news is actually that, fast forward to today, and some of the state of emergency declarations have been lifted. We are starting to see a very gradual reopening process. So ironically, even the April-June GDP print actually may not capture what's going on the ground in terms of the reopening process.
Izumi, has the Abe government done enough? Has Mr. Kuroda also done enough to shore things up? And if so, what happens with regard to some of the transmission mechanisms, which can be a problem? We can just have, on the one hand, Japanese shoppers not spending and banks are awash with cash not lending.
Yeah, so I think there's three phases to the policy response, and the first phase was, the fact that both the central bank and the government were just purely focused on backstopping the markets, preventing the financial system from blowing up, providing liquidity assistance so that companies don't blow up, and just trying to preserve things as a standstill still so that things don't get worse. So I think with the economy starting to reopen, we're past that sort of emergency, phase. But the question and the challenge that policymakers face now is that if we're looking at a very sluggish recovery, which is most likely to be the case, then you're looking at firms that are going to be dealing with depressed incomes for many more months to come. And that means that, what were originally liquidity concerns may actually turn into solvency issues, with more and more corporates facing the risk of bankruptcy. And this isn't just for small firms, but the risk is also for big firms as well. So I think the focus now should be on, what kind of permanent capital injections the government's willing to consider for some of these firms, and whether, some of the more lending-based assistance that they provided earlier in the crisis will be turned into permanent subsidies and capital injections.
Izumi, how much support can Japan get from China, which is reopening and planning to spend on infrastructure and spend big? Can perhaps China soften the blow for Japan?
Yeah, I think a little bit. The fact that China's, especially the industrial sector, tech demand is recovering quite nicely is good for Japan, given its exposure to China's, CapEx needs and things like that. But it's not, we're still going to be dealing with less demand out of China, because one of the big drivers of China, external demand from China was that tourism story. And I think that's going to be pretty much down in the dumps for a long time. So it's a mixed story there, but it is, encouraging to see that China's manufacturing recovery is coming along nicely.
You talked about policy support. Kuroda has come out to say that perhaps negative rates is not an option at this point in time. What do you make of the about turn?
Yeah, I mean, I think the pivot of the Bank of Japan away from negative rates policy has been quite clear for the past year, but I think now it's become much more explicit from the Bank of Japan. I think the idea is that with interest rates, already very low, and banks facing challenges with their business models, now is not the time to deliver further negative rates and put pressure on financial intermediaries, which really need to step up if we want this, this recovery process to take place. So the Bank of Japan is focused more on QE right now, and some of the market interventions that it's been doing. So I think the risk of further rate cuts in Japan is quite low, but they're going to still have to, focus on the corporate bond purchases, commercial papers, and this new funding for lending program that they're working on right now.